Now the question becomes, why do I even want to increase my margin? You are constantly talking about the fact that I want to increase my margin, but why? I'm gonna have to revert this question back to you. Why do you want to have extra money? What things are you trying to achieve with extra money in your life? You answered the question, do you want to make more money, like earlier in the course? Why do you think that is? Why do you need more money? You might say that I have a bunch of stuff that I want to buy. I want to have like a TV that is fancy. I want to have a PlayStation. I want to get a car. I want to go on a really nice vacation. I want to buy a home. I want to buy an apartment. Or some of you might actually say, I want to save money and have extra money as well. So those are typically the sort of things that we think about when we say, okay, what are you gonna do with money? Now let's actually break that down and understand what those things are. So in general in your life, whatever that you own fall under two categories. They are either assets or they are liabilities. Let's define those. So assets are things that either increase in their own value or they will enable you to make money or they will make money for you, right? So assets, they increase in value or they will make money for you. And liabilities are the exact opposite. Liabilities are things that lose value or cost you more money down the line in the future. So with that definition, now we want to understand which category does every single thing that we have on this list, on this picture, fall under. We want to understand that, okay, if I want to buy a TV or a PlayStation or whatever, what is that? Is that an asset or a liability? By the definition, a TV or a laptop or a PlayStation falls very clearly under the definition of liability because it loses its value. Open up Blocket right now and look at the price of a TV. New, you need to buy that TV for, I don't know, 8,000, 10,000 kroner. But secondhand, you can buy a very, very similar TV for like 4,000, 3,000 kroner, right? So it very clearly loses value. So this definitely falls under the definition of a liability. Then you want to think about your car. I want to buy a car. Is your car an asset or a liability? Your car is definitely a liability. It falls under this definition and it actually does both. So first of all, it loses its value. So as soon as you buy a car, if you buy a new car, it immediately loses 10 to 15% of its value as soon as you drive it off the lot. So it loses value and it also costs you money down the line. So you have to pay for its maintenance, you have to pay for gas, you have to pay for basically the cost of running a car for yourself. So it's a double whammy of liability. So a car is always a liability. There is a third trap, there's a third liability in a car that we are gonna get into. So car is generally a really, really bad thing in terms of finances, specific, just about finances. It's not a good decision. Like car is not a great financial move in general. You do it anyways because you might need it in your life, but just be aware that getting a car financially is not a great decision. There's a lot of downsides to getting a car, and it's definitely a major liability. Then you want to think about, okay, what is my job in this definition then? It very clearly falls under the definition of assets, right? Because it makes money for you. It's your primary source of income. So it is making money for you, so it's technically an asset. Then you want to think about, what is my credit card? Or what is credit in general? Or what is buy now, pay later? Let me buy this thing, but I don't want to pay for it right now. I will pay for it later. That's a very similar definition of credit, but packaged in a different way. Similar things to Klarna and other kind of services that gives you the buy now, pay later option. So generally the idea of the credit, it clearly falls under the definition of liability because it is actually a promise to pay someone else money down the line. So that's exactly what's happening when you're using Klarna. So Klarna says, buy this right now, and you can pay this in 30 days, or you can pay this in 4 installments over the next 4 months, or something similar, right? So it's by definition, it's a promise to pay someone back. So down the line, it's gonna cost you money. So any sort of credits, any sort of loan, or any sort of buy now, pay later falls under the definition of liability. There are different levels of liabilities and how bad different liabilities are, but that's a different discussion. On a high level, they all fall under the definition of liability. Then we move on to cash. So if you keep cash for yourself, so think about it, like nobody uses really like actual cash anymore, but money that you keep in your checking account, in your bank account. What is that? Like you have some leftover at the end of the month, you just keep it at your bank. Or if you still use cash, you have some cash under your mattress or whatever. What is that? Is it an asset or a liability? Cash is most definitely a liability, because in this definition, cash loses its value. You might ask how? Mostly because of inflation. The biggest factor in cash losing its value is inflation. So every year, the price of goods and services and everything that you use on a daily basis goes up because of inflation. You have periods of time that you have much, much higher inflation, like in the past few years in Sweden, like 2021, 2022, the pandemic era and everything. So we had a huge rise in inflation. So every year your cash was worth way less than before. So think about it this way. If you have 20,000 kroners today and you have 20,000 kroners in 5 years, how much more can you buy with that 20,000 kroners today compared to 5 years from now? You definitely have a lot more purchasing power today with 50,000 kroners that you will have with the same amount of money in 5 years. So cash in general loses its value due to inflation if you just keep it as cash. What is your apartment or house or primary residence if you buy one? Is it an asset or a liability? So this one is interesting. Your primary residence can essentially be both because it falls under both definitions. Your property most likely will increase in value depending on where you are in the country, if this is like high demand for that particular type of property, the size or whatever. So, but most definitely over time, the price of property will go up. So from that perspective, it's an asset, right? And keep in mind, we are talking about your primary residence, the place that you actually live in. So you cannot really think about renting it out. If you could rent it out, maybe you could make money out of it, but that's a whole other different discussion. So yeah, it increases in value technically, but it can potentially lose value as well, depending on what time frame you're looking at. Again, in the pandemic era, interest rates went super high, so people stopped buying houses and apartments. So the demand for buying property was low, so the prices basically went down. So everyone kind of lost a little bit of their house value or apartment value, right? So it can lose value, and it also costs you money down the line. Again, you have the maintenance of a house and apartment, right? So you have like all the repairs that you have to do. You have like, depending on your like property type, you might have taxes, you have off-gift, you have utilities, you have like a lot of stuff that you pay just for living in an apartment or a house. So all of that is the money that will be expensed from your cash flow on a monthly basis down the line. So a house, depending on how much it increases its value and how much you pay for it and like pay for maintenance and upkeep of it, can be an asset or can be a liability, depending on where that balance kind of falls. And then the last but not least is investments. So I don't know if everyone has the exact same idea of an investment right now, but we are going to define investments down the line. But think about investments however you understand it right now. Is that an asset or a liability? By definition, the type of investments that we think about and talk about in this course, they fall under the assets category. So the idea is that we invest something that we expect for its value to increase over time. or in some scenarios make you like extra money, which is very, very similar, right? There is the potential of that investment to also lose value as well. But we are going to tell you about a strategy that very, very closely, I don't want to say guarantees because nobody can guarantee anything in a financial market, but it reduces the risks of losing money to a huge extent. So you have more than a 95% chance of increasing your money in investments. We're going to talk about a strategy that's a big part of this course. But in general, that's what we think about. So investments in general are your assets. They're going to increase in value. And then just a summary of everything. This is like a high-level view of everything that we just talked about. So now you understand the definition of assets and liabilities, and you can start recognizing what things in your life are assets and what things are liabilities. We always want to have more and more assets, and we want to be very careful about liabilities. I don't want to say that we don't want to have liabilities because that's not possible, but we want to be careful. We want to recognize the things that we are getting are actually liabilities or not. Why did we even talk about assets and liabilities? The reason for that is one of the core numbers that you need to start tracking in your financial life in order to gauge how far you have come or how much progress you are making in your financial life is something that we call net worth. Your net worth is essentially all of your assets minus all of your liabilities. Now you can ask, okay, you said everything is a lie, everything that I buy like a TV or PS5 or a laptop, they are liabilities. Do I need to calculate all of those? And the answer to that is no. From now on in this course, when we say liabilities, we are explicitly talking about loans, debts, and any promise to pay money down the line in the future to someone else. So think about it this way. All of your assets minus all of your loans and debts. That number is your net worth. That number tells you that if you right now liquidate, sell everything that you currently own in this world and you pay off all the loans that you have right now, how much money is your financial life worth? And that is a very important number to take notice of. We want to pay attention to this number. At the end of this course, towards the end of this course, we are going to actually give you all the tools that you need to calculate this number for your life. And this is something that you want to do over time as well. You want to look at this number, have an eye on this number, and try to increase this number. So this is extremely important for us to understand our net worth.